Tesla stock is absolutely ripping here today, up just about 10% at the time of recording this video. And this all comes out of the news that we got this morning as Musk touts a successful robotaxi Austin launch. Tesla rolled out autonomous robotaxis in Austin on Sunday to a limited group of testers. And Tesla's CEO, Elon Musk, said in a post on social media platform X that customers were charged a flat fee of $4.20. 420, if you will. The launch puts Tesla head-to-head with Alphabet-backed Waymo, which is already operating a fleet of robotaxis in several cities across the states. Wedbush securities analyst Dan Ives, who is a famous longtime Tesla bull and often wears some really cool coats, check out this picture. Longtime Tesla bull took part in the limited robotaxi service launch in Austin, Texas on Sunday. Late on Sunday, Ives wrote that before experiencing the Model Y robotaxi, he, quote, expected to be impressed, but walking away from it, all there is to say is that this is the future, end quote. He then went on to say, quote, we took two approximately 15-minute rides around Austin, and the key takeaways are that it was a comfortable, safe, and personalized experience. The ride itself was completely smooth, and it was indistinguishable that the car was driverless, as there was never a moment in the vehicle where we felt as if it did something irrational. The analyst added that the successful robotaxi launch is really just the beginning of the Tesla AI story, and that the limited launch, quote unquote, exceeded our expectations and offered a seamless and personalized travel experience that has lit the spark for autonomous driving. Tesla officially launched its limited robotaxi service in Austin, Texas on Sunday, with the first ride officially taken with a flat rate of $4.20. Participants, including several Tesla social media influencers, received early access invites on Friday. Tesla has geofenced the service, which excludes airports. A map of the geofenced area is available in the robotaxi mobile app. Tesla released the app Sunday afternoon and said a, quote, safety monitor rides in the front passenger seat. There's also a assistance option if human intervention has to take place. On Sunday, videos of robotaxi rides flooded Elon Musk's social media platform X, formerly Twitter, as social media influencers took part in the rollout. And I know that was a lot of article coverage, but that keeps us in the loop at least of what's going on with the Tesla stock price, now trading at $355 a share. And this is definitely a good day for my personal portfolio, as Tesla is a pretty big sized trade that I have in my portfolio that I bought heavily down in the April lows. Now, I know I sound like I'm patting myself on the back, and that is because I am on this one. Not everything that I buy works out this well, but Tesla is doing really well right now off of this idea, because it's relighting the excitement factor for many of the investors who have been wondering about this robotaxi. And so we're getting some good news in terms of the robotaxi rollout, which is what investors have been looking for from this company for some time. It is no question that when you look at the financials report for Tesla in recent years, there has been some major things left to be desired. Take a look at revenues, which have been actually declining here recently. Net income has not been very impressive. Their margins have dropped off a cliff, and the PE ratio has skyrocketed. This is not a stock that you buy based on the valuations on recent reported earnings. This is a speculative stock. And the reason I say that is because if robotaxi explodes and goes full nationwide and has the potential to become this giant money-making machine, then yes, the stock, their finances should look a little bit more normal in the future. But as it stands today, looking backwards, their earnings do not marry up whatsoever with the valuation of the company. That is, again, if you are not considering the potential of some of their other programs, the big one being the robotaxi rollout. And so with a successful launch, it's understandable why the stock is trading higher today. Tesla recently has been mostly disappointing in most of their reported earnings. You can see in Q1 and in Q4 of 2024, they missed expectations, which is the yellow line. The green bar is, of course, the reported earnings per share, which, like I said, 3 out of the last 4 have been negative reported earnings reports compared to expectations. You can actually see that their earnings per share in the last several quarters has actually been declining. And this is probably why the stock has been under heavy selling pressure recently. But as I mentioned, I added some shares in the April lows here, which have turned out to be a really good purchase of the stock. What we can see here is that I have a total of 400 shares, but I have sold calls against 200 of my 400 shares. Of course, that call that I sold is not looking super great at this time, but if we do exceed $375 per share by expiration, which is a couple weeks away for me on this call option, then I will take profits gladly on half of my position, and this will have been probably definitely my best trade of the year, in fact, across everything that I do in markets. So again, the idea here is basically, I love the innovation that happens at Tesla, and I think that there is a lot of future potential. However, it is too big of a size in my portfolio. And so I am looking to get rid of the share or 200 of my 400 shares if we trade at or above expiration date, the $375 strike price on the call that I sold. So I shorted 2 calls, which is accounting for 200 shares of Tesla, in which I own 400 total. And again, like I said, this is a good problem to have. I own a lot of shares of Tesla, and with the rally happening here, I would like to take an opportunity to cash in half of my trade. And so today we see a 10% or so rally in the stock price. But the thing with Tesla is it's so volatile that this could very quickly move in one way or the other direction by such a large margin. Hence why the call options that when I sell them, they offer such high premium, simply because the expected move for a stock like this is very high. Now, the question is Tesla a buy today? And in my opinion, the RSI here reaching into overbought territory, and those financials that I discussed still make the stock a hard one for me to buy heavily unless we have some sort of market downturn event like we saw in April. Those are the only times I can really justify taking a little bit of risk on a stock like Tesla. And so my plan from here is not to add new shares, but rather to take profits on some of the shares that I own, or to add to the shares that I own if we do get a sharp market sell-off. Again, I love the innovation that is Tesla, but it would be foolish of me to not recognize that this is a highly speculative stock. And what I mean by that is highly speculative stocks have the potential to make 300% gains in your portfolio, or you could lose everything that you put into the stock. Last week on my stock channel, we talked about Enphase, which is a very popular name, especially back a few years ago, in the solar technologies part of the market. And what has happened since then has been a massive loss of wealth for many investors who bought into this very high and excited, or this hype and excited stock. And you can see it's dropped by 90% of its value. So while I do like the potential innovation of Tesla, no one knows the future. And so it would be, in my view, irresponsible of me to not look to scale out of a portion of this position, which is a heavy trade within my portfolio. At the end of the day, even though you can do all sorts of research on stocks that you might like or be excited about something that could be coming down the pipeline, I still think it's really important that we do our due diligence, do our risk management behind why we're in a trade, and really importantly, the position sizing of positions of stocks in our portfolio is really, really important. Now, what about Uber in all this? Of course, this is a competitor, and you might be wondering why I also own shares of Uber in tandem while owning shares of Tesla, which are now very much competitors, the three being Waymo, Uber, and Tesla, and I own share in all three of them. Well, the reason is because I think the robo-taxi and self-driving stuff and just ride-sharing business in general, this rentable, driving vehicle marketplace is a really big one. And while, yes, they are competitors, I think there's plenty of room in this marketplace, which, many people have estimated to be a hundreds of billions of dollars worth industry that is coming in the future. This is an article from 2018 talking about how Tesla could revisit the vehicle-to-grid technology. And now it seems like this is back in full force. This idea that existing Tesla owners could actually make money by uploading their Tesla into this self-driving economy, which I think is really cool. And I had a thought about this that I wanted to share specifically, in relation to Tesla. I don't know all the legalities of this, and I'd be very curious if anybody has comments on this in the comment section down below. But I'm wondering, the regulation about which vehicles could theoretically be allowed to drive on the road like this, I imagine is a very strict rule set. And perhaps Tesla has the edge on this, where they own the vehicles that are also involved in the self-driving component. So perhaps this is an edge for Tesla in some ways, where existing Tesla owners can essentially offer up their ride sharing or their vehicle to the ride sharing economy, Very, very cool. And again, I think that that restrictiveness or the regulation that would require certain vehicle models, etc., to be allowed to do this may actually make this marketplace more accessible to Tesla specifically, which is pretty cool. So obviously, as a shareholder, this is great in terms of a bounce back in the stock. I think we have some very nice momentum. We even kind of pulled back just briefly here recently, but found buyers very quickly. Despite the Elon Musk, Donald Trump stuff, it seems like that is mostly behind us. And I actually think that with Elon Musk now paying a little bit more attention, out of the Doge scene a little bit more, that may actually be another driving force for this stock. But what I want to remind everybody who watches Tesla stock to think about is that this is, like I said, a highly speculative company. It has the potential to do remarkably well, or also to crash very, very hard. And so with my own, kind of discussion here, I've mentioned that I would like to reduce my sizing in the stock simply because of that nature of how this company is. It's very high risk, high reward. By the way, if you want to explore financial data or all sorts of other tools, consider checking out the Stock Box. There's a link in the description down below for more information on the tool. Make sure to subscribe to the channel if you're new, and we'll see you in the next one.